Hi everyone. I'm the moderator for today's session, Khai Lin, co-founder and CFO of Fundnel. Very happy and glad that I'm joined by three other esteemed guests. Maybe I will just go one round of brief introduction. Even though I don't think they need further introduction. Koi, do you want to go like a quick?
Sure, I'll go first. My name is Koi. I'm one of the founding partners at Monksil Ventures. We're an early stage venture capital fund focused on Southeast Asia. So we've invested across the region. Some of the more names that you might know, Cuaca, C88, Ninja Van, for example. So we've been investing now for about 5 years.
Cool. Vinnie, Lauria, founding partner at Golden Gate Ventures. Been coming to Technology since they started, and was just reminiscing with Willis Wee backstage that my first business trip to Jakarta, I was crashing on his couch.
Hi, my name is Willson from East Ventures. We are early stage fund in Southeast Asia, focus a lot in Indonesia. Probably to understand more about us, we would like to explain who we are. Video logo.
We believe in natural entrepreneurship. Entrepreneurship that starts from the heart. It is lonely in the beginning, alone, solitary. But the founder comes with a strong will. Once started, the journey is not easy. There are a lot of ups and downs. But eventually, many find traction and feel great again. However, that is not yet the end. Entrepreneurship is a long journey. But in the end, it is rewarding. At East Ventures, we understand entrepreneurship. This is our story. A decade of impact.
So we are VC that really understood entrepreneurship, and we back entrepreneur wholeheartedly.
Got it. I'll just give a brief intro about Fundnel. Fundnel is a licensed private investment platform headquartered in Singapore. We seek to reinvent current state of the private capital markets and how it works. And since just this year alone, we have facilitated more than 100 mil volume of transactions through Fundnel's platform. Okay, with that, I think we can just start today's exciting topic about investment landscape in Southeast Asia. Why don't we just go broad first, right? Maybe you guys can share in terms of what you see from a trend perspective the last 5 years, and given the current instability or geopolitical situation we have, any prediction in trends we'll see in the next 5 years?
What do you mean by instability of geopolitics?
I think with the current U.S. trade and so on and so forth,
I see.
Trade war.
Yeah, because we don't do a lot of business with U.S. or China, and this actually don't really impact us. In Indonesia, it's pretty stable because we just have the president going to be inaugurated in 20th of October. This is his second term, and he's the big supporter of digital economy. He has been pushing hard, reduce the regulation, ease of business has been increasing in Indonesia. I mean, we are in a very stable state. This one. The second one, the middle class, the GDP has been rising. So the consumer has been very efficient. It means well educated, easily to acquire. They really use digital services. So Indonesia is all about apps now.
Got it.
And then, I mean, yeah, there's strong growth here, I would say. I do think there's impact, but it's positive by the U.S.-China trade war. I mean, as an American that's been out here almost a decade, there's manufacturing that's moving out of China, that's moving down to Indonesia, to Thailand, to Vietnam, and all of that is a rising, middle class, consumer spending more, higher GDP. So this is where the growth, globally, this is where the growth engine of the whole world is right now.
Other than, I think Indonesia has been brought up a few times. Other than Indonesia, any other country that you see that's up and coming from various macro perspective? I think Vietnam is purported to be another one. How have you guys deployed from a capital perspective into any other country other than Indonesia, or maybe speak about what's your view on Vietnam?
So at Monksy Ventures, we've always thought that, Southeast Asia, despite its differences in terms of other countries, collectively form quite an interesting thesis. Indonesia is clearly one of the places that has a lot of successes, as Willson and Ace Ventures have demonstrated. Over time, I think we're also seeing some of the activities in Vietnam, and I think, Vinnie, you could probably attest to that as well, that we're seeing more entrepreneurial energy in that country in particular. But that said, I think across Southeast Asia, the amount of spending on the digital platform is still relatively small vis-a-vis the size of the economies. There's actually more upside, right, than downside, in spite of all the potential trade war that could press down the growth of the GDP. But because you're still coming from a lower base, right, trying to capture more of that GDP in general, regardless of whether it's going up or down. So I think generally for startups in the digital consumption space, I think you're in a good place right now in Southeast Asia.
It's interesting that you mentioned that we are at a relatively low base from a valuation perspective, ecosystem perspective. But I mean, given the recent IPOs that's failed, speculations within WeWork and how Lyft have performed, how other listed companies has tanked post-IPO. Do you think that this prediction is still true, that we're at a lower base, or do you still see reset in terms of valuation?
I think IPO, what we have seen so far in the U.S., demonstrates that you need to have a good business model. And I don't think that's true in any cycle. Right. I think in Southeast Asia, you are truly having startups that are addressing the needs of the people, building businesses based on revenue growth, and over time, sustainable margin is my expectation. Clearly, not all of them will get there. Many of them will get there, right? So once you do have those fundamentals, I think IPO is just one way of demonstrating that these are valuable companies, right? And the public markets value them.
I disagree to use WeWork as a reference. They don't do the work, we do the work. We have been very focused in unit economics, margin, and in fact, since about a year ago, many of our startups now really profitable. So I think we shouldn't use the parallel between this region and the other region. In terms of the valuation, the fact is the valuation in this region is increasing really fast. Is that a bad thing? No. I think when the valuation increase fast, it means there's a supply and demand issue. It seems like it's more supply than demand. So a lot of money in the region, valuation increase, the market will be bigger, the pie, people will do more startup, everybody will start come up with some silly service or a sophisticated service, that's fine. But at the end, then after that, it will go down a bit, then probably that's the good time again for us to invest more. So right now we still make an investment, but we're watching because I think the valuation is getting higher and higher.
And the other way I look at it is that everything's on a curve, and like where the U.S. and China is, they're at that tail end of a curve where there are valuations that go up, and at some point they have to give. But we're still in like the first 5 or 6 years of like any sort of major internet growth here. Like when a lot of retail started going bankrupt in the U.S. a few years ago, like Toys R Us, for instance, out here, like I remember in Singapore, seeing on the cover of the page was like, Toys R Us is still strong in this region. And the reality is just at a different place. E-commerce is huge in this region. It is 80 billion USD a year, but it's only 3% of all retail transactions. That is going to 5x over the next like 5 or 6 years. So there's huge growth ahead. So even if there's shifting and popping and valuations that are too high, that doesn't affect the fact that there's this huge opportunity in the next few years here in the region.
Got it. And talking about, we did mention here about influx of capital into the region that's pumping up valuation, as mentioned. But despite that, I think as an ecosystem perspective, Southeast Asia have not seen that many exits. Do you see any change in that trend or any development from a capital market perspective that will actually help in this current situation that, lack of exit is preventing inflow of money back into the ecosystem?
So I don't think there's a lack of exits. Again, if you look at everything over time, where 2015 may have been when things really took off, 4 or 5 years into a growth curve. It takes about 8 to 10 years to make any sort of massive sort of success. If you look at China 15 years ago, we're doing the exact same playbook. It was 3 companies buying companies back then, Baidu, Alibaba, and Tencent, and before some even went public. Now you have Gojek, Grab, Tokopedia. Gojek has acquired 11 or 12 companies since they started. So the fact is that our acquisitions that are happening, they're smaller. But again, if you think of it as a growth curve and look at other markets and how did that grow, that was the natural evolution. And as these companies go IPO on global exchanges, they'll have even more capital, more cash, higher valuations to continue fueling that sort of acquisition growth.
Got it. And I think another trend that we often hear about is that in this region, there's a lack of late-stage funding. I think East Venture have a EV growth, Golden Gate also have a growth fund. Do you expect this trend to continue about people shifting to late-stage funding, or any other trends that you foresee due to this gap that people report about?
Well, I think for Willson and us as well, it's not shifting. We're both investing at earlier stage and growth stage. And again, that's a playbook. Like, look at Sequoia. Every market they're in, they have an early stage fund and growth fund. That's true in the US, that's true in China, and now it's true in India. So I think this model of, top brand or top tier investors being able to say, hey, we want to capture more of the market and have now more exposure and a brand that people will recognize across these different stages. I think, again, it's a natural evolution of some funds in the valley.
Yeah, so it happened naturally. We don't have a vision, we don't have a playbook what we want to do. So we just keep investing in early stage, keep investing. In the year of 2017, at the end, we did some internal analysis, and then the number shows that 70% of Series A in Indonesia seeded by us. So we're like, what? We have so many startups in Series A. Why can't we do Series B? So we start raise a new fund. So the way we work is very bottom-up driven. We try not to plan and try to predict future. Nobody able to do that, but we try to read the data, see what makes sense to us, and what important is whether you're capable to do that. The reason is early stage investment and later stage investment is totally different. Your mind actually upside down. The early stage you do 0 to 1. You help company product market fit. Growth stage, it helps company from 1 to 100. It requires another different kind of mindset. For that reason, we don't think we can do that. So we partner with Yahoo Japan, with Cinemas Group, because they're the one that crunch the number. I'm the one that make an investment.
And I do think that there has never really been a Series C gap in Southeast Asia, right? All the really good Series C companies all got funded. And these are investors who are international, right? The Warburg Pincus of the world, the Temasek of the world. Why? Because these guys are used to doing the bigger deals. Mm-hmm. They're used to having teams that can look at data from the last 3 to 4 or 5 years and make those decisions, and they invest globally. So I think, we're getting to a point where I think the Series A, B, you still need guys who are on the ground, like the folks here on the panel, to really appreciate the dynamics and all of that. But once you get the Series C and Series D, $30, $50, $100 million kind of investment rounds, you're talking about global investors.
So then is the question is B then considered like value of death?
Actually, whatever series it is, doesn't really matter. Yeah, doesn't really matter. What important, the company create value. That's very key.
Okay.
Value creation and scaling. When you're able to create value, you scale fast enough, you prove that you can still scale and the ceiling still pretty high, I can assure that the money will come, whatever series.
The best teams I've found so far are great at fundraising. Not that because they're fundraising, for the sake of fundraising, but they have a team that's always setting up relationships, and when it's the right time to raise from the right set of people, it happens. Right. And so it's not a transaction anymore, it's a continual conversation.
And on that, just as like a lesson to be shared, as a CEO running a company, he or she shouldn't be the one constantly out there fundraising. And the really good teams, they tend to build out people around them, investment relation teams or VPs or CXOs that do spend a little more time outward-facing fundraising. And you see that across like the unicorns across the region. I would say a lot of the earlier stage startups, they don't even always realize that, but those are roles you need to build out early on that people can grow into and be very senior within the firm.
Got it. I mean, let's just change the angle a little bit in terms of like VC as a business model, right? I mean, do you guys foresee any change in innovation within the VC business model? Whether I think there's a period of time where people were talking about, ICO, of course, that has come down massively. Any other form of modification to the VC type business model you foresee in the near future? And then the second question I have is that, of course, in Southeast Asia, there has always been a constant trend where we see that LPs actually make direct investments more than investing through funds. How do you actually tackle that? Yeah. I don't know.
I think what we've seen in Southeast Asia in the last few years is really the variation in approaches and strategies. And so you have folks who are doing multiple stages like both EV and Golden Gate. You have more specialists now that are focused on specific sectors, etc. I think that's kind of what you expect when the ecosystem matures, right? There are more folks who are more focused on specific strategies to be differentiated from the rest of the people. And that's kind of to be expected. Some of these fads like ICO, I think that's going away. That was a fad, right? But although, other folks may have more insights than me there. In terms of LPs investing directly, that's happening across the world. I think LPs just want additional opportunities to invest, but they still rely on local partners like ourselves to uncover, to nurture some of these younger companies so that they can invest in the later stages. So I see that to be more kind of a collaboration rather than a competition.
Definitely it's not competition. That's very clear. When we call them LP, there is a reason why we call them limited partner. The limited is the keywords. Actually, they have limited capability doing something. That's why they put the money into GP, right? So that's the nature why we call them LP. But when some guy have a lot of money and try to invest directly, probably that's what you're trying to ask. It is okay. What important about investing is not about the money alone. It's about the value behind the money. That's the reasons why we differentiate between smart money and dumb money. So if you think you want to raise money from LP or big guy for the sake of the money, then probably it will come with a responsibility. You have to manage the expectation of that guy. Yeah, this is actually where the VC play the role. I think that's very clear. Yeah. So this is not competition. Everybody have their own value proposition.
Vinnie, anything to add?
I would agree with that. So yeah, it does not. It's collaborative when it does happen. But to your first part of the question about is the VC space evolving? VC is 60, maybe 70 years old. So it's like whole scheme of things that is kind of new, but it's constantly been evolving. And so our ICOs might have been a short-lived. There's crowdfunding platforms. Even the fact that we're VCs here in Southeast Asia, that's like an evolution of this was for decades only on Sand Hill Road in Silicon Valley. So what will the future look like? It'll definitely use way more data, way more machine learning. I'm biased, but I do believe there is a human element that makes it slightly different than a pure financial transaction. There's obviously a lot that we all provide to the portfolio that makes us more than just a financial partner, but that we're providing human capital and our network and our experience. So I think that's always going to be required, but there'll definitely be evolutions of how deals are looked at, what data can actually take in. And that's why, I mean, there's these massive platforms like App Annie that just give you so much insight in how apps are actually performing. There's VCs that use that and there's VCs that don't. But as you get more and more of that data, it's going to be hard if you're not using it.
Got it. I think the last part, I would like to focus more on about like maybe share some of your portfolio. For me, I personally, I'm just interested if you were to name one company in your portfolio that's like going to be like you think it's going to be the next unicorn. Which would it be? But now, I mean, they're not, as in going to. So it's just probably it's good for us to actually see where our bets are, and I guess let's find out more about this next wave of unicorn, right? Koi or Vinnie?
I can do first. Yeah.
Okay.
We normally don't mention, not because we try not to pick, and we have many actually.
Okay.
We think there are 13 of us from our portfolio going to be aspiring unicorn. Oh, in Temukan they call it aspiring unicorn.
Expiring unicorn. So you think there are 13 of them?
Yes.
Okay. Vinnie? No.
Well, so yeah, I mean, my analogy is I have 3 kids, and it'd be like, yeah, which kid do you think is gonna do X, Y, Z? So yeah, we don't have as many. We have 3 unicorns in our portfolio. What I'll say is like just areas. There are definitely areas that there has not been unicorns yet that we'll definitely see some. So I think areas like health tech, insure tech, ed tech. These are areas that nobody's really dominated, and I think we've all invested in that space. That over the next few years, and again, I take the playbook of looking what's happened in India and China and how that evolved, and it'll just be natural over the next few years that we'll see that.
I love how we're not answering the question all at the same time, and I try not to answer the question as well. So, among Seal Ventures' strategy is we have a very concentrated portfolio. We do about 5, maybe 6 investments a year. Those that we do invest in, we have very high conviction in. And so everyone that we invest in, we believe that they can become big. Right? And so really, I think if you ask me which one will become big, we believe that all in our portfolio will become big. That's why we invest in them. But will they all become big? No.
And just so that, 'cause I didn't realize this when I was on the other side as an entrepreneur, like when we're investing, I mean, I'm assuming we all think like this, but you're basically saying like, yeah, how does this become that $1 billion opportunity? How does this like return the entire fund with this one check? I remember pitching, my last company was a forum hosting platform, and pitching to some VCs, and we would put numbers and like projections up there, and they would tell us it wasn't big enough. And it was always so hard to like kind of get around that, but they're really looking, I mean, we're all looking for what is going to change? What is really going to crack open something that a legacy business is being attacking? Nothing technical has gone after it. This goes in and it changes behaviors and it cracks open something huge. And this is where internally, sometimes we're trying to make a case stronger than even the portfolio company or potential portfolio company is for us about just how big could this opportunity be.
We come from different perspective. I disagree. It's the way we make an investment. When we make an investment, we're so focused on people. So we never really think whether this portfolio that we invested will return the whole fund or will they become the unicorn. No. We are investing in people who solve problems. That's very clear. How big the business, whether there's a business model or there's no business model, is less actually relevant when we make investment in the early stage. Because the key is about execution. When I say about 13 unicorn, aspiring unicorn that we are thinking, it's because Temasek come out with the reports saying that there are 70 in Southeast Asia. So we kind of like, who are these 70 guys? So we look at our portfolio and try to figure out one by one. Hey, we have 13. So that's the numbers.
One caveat is I think at different stages, yes, and especially the earlier you go in seed, the whole idea of what is it going to be is going to look completely different. But as you do go up stage, especially if you're investing at the growth stage, like I think they should have the problem market fit kind of figured out. But hands down, I think any investor, it's always about the team. I would rather invest in an amazing team with a crappy or okay product that maybe would have risky sort of potential than a great product with a bad team.
Yeah, so I think to add on that, right? So what happens if you find a great company with a great startup, with a great potential, with a great business model, but you don't like the team? You have no chemistry. Our philosophy, we will not invest, regardless how big is the business. It's very clear.
Koi, do you share the same view?
Oh, absolutely. I think the team is a big part of it. We have kind of a view in our team that we would not invest in guys that we cannot get along with. It's very straightforward, especially because we invest at a relatively early stage as well. We expect to spend 5, 7, even 10 years with some of these founders. And life is short, right? I mean, good founders out there, so find the right ones to work with.
Got it. Since you guys are not going to answer the question on picking the unicorn, maybe you can share with the audience any specific sector that you see or that you think that's undervalued right now, whether is it because there's lack of supply in that particular, it may be a certain geography, certain industry, in your own view. Hopefully not Indonesia.
So I mean, this is true in Indonesia. I think logistics, because it's very old. Everybody kind of assumes that it's been answered, and there's a lot of existing players. But I definitely think it's an undervalued because e-commerce is breaking existing infrastructure. Whether that's last mile delivery, whether that's cross-border, whether that's warehousing, and we've all invested in different types of logistics companies in the spaces. But I think that is a massive opportunity in this region that is very undervalued.
I think some of the harder verticals like healthcare is going to get addressed. I mean, these are usually much more local. And you got to appreciate the local conditions, who's paying for it, what the problems are, how is it being served right now. And clearly, we talk a lot about the underbanked and the unbanked, but I think the underserved in terms of healthcare is a much bigger problem, which requires a lot of smartness in terms of addressing it and knowledge about how things work in this part of the world. So it's not one where you can just bring a model from somewhere else and just plonk it in Southeast Asia, because I don't think it will work like that. So healthcare for me has a lot of challenges, but also a lot of opportunities.
You want me to answer the question? You don't want me to answer the question?
I say you can answer, but cannot talk about Indonesia.
Unfortunately, I only invest in Indonesia.
So you still think the valuation, but you mentioned just now it's a bit overvalued, right?
Oh, no. When it's overvalued, doesn't mean we stop investing.
Oh, okay.
Overvalued, it means we stop investing expensive startup.
Got it. Any particular sector within the Indonesia ecosystem that you see is currently undervalued right now?
No, in Indonesia we have so many problems in these countries, and we believe that country like Indonesia, they have so many problems. It creates a lot of opportunity for the digital economy to solve the problem, because we look at technology as a tools to solve problem, not really the industry by itself. Yeah. So when you have a lot of problem, you use the tools to make things faster, make things cheaper, easier. Then you create a value. When you create a value, you solve problem. Then this value itself, value creation, have a quantitative value in terms of dollar. Yeah.
And if I could add on to that, because I agree with that, and once again, as an American out here, so the U.S. has so much legacy baggage that this is more exciting to me in terms of the problems that are here. The opportunity to, even in like health tech space, that's heavily regulated by the FDA in the U.S. It's really hard to do new things, even if in telemedicine. But here you can, it's the Wild West, and you can try it out, and you can build huge, you can solve huge problems, and generally the governments support it because there's nothing else, and that is what's really exciting about this region. And the other thing that I think is also cool about this region is every country has its own constraints. Even going across the region has its own sort of constraints, and to me, that's where great entrepreneurs flex their muscle. When they see constraints and they think, how do I hack this, and how do I get around it, that's when they start to see new opportunity that nobody else even thought about.
It's interesting you mentioned about constraint, right? Because that would be the single limiting factor in terms of like localization. As in, people often talk about ASEAN as a bloc, but in fact, from a localization perspective, it's not. Do you see that? So, in your perspective, do you think that there's any chance of integrations from, I don't know, from a ecosystem perspective that will help in terms of localization as an issue? No.
there's like a million things that could help. Like Euro has the same currency and stuff like that, but I don't see any of that
You don't
stuff
see it
helping.
happening.
And business will grow despite that. So nothing needs to happen. If that does happen, it greases the wheels, but it doesn't need to happen.
Got it. Okay, I think the audience probably are curious about some of the past deals that you have missed out on. Just out of curiosity for, us to actually learn more in terms of your deal picking process, or just a fun fact for us. Is there any deal that we've passed that we regret the most since you guys started the fund?
We don't.
Not even one. No. Okay.
Consciously, we know why we need to pass certain deals.
Okay.
And some of them become really big, but we are okay because it's by design. So
By
it's all about
design.
hypothesis.
Okay.
In order for you, so you have to understand that there is no way VC can be 100% conquering the whole market. No one able to do that. You will miss one or two, but your hypothesis has to be built to capture the most of the good deals. So for that reason, we build the hypothesis, and we understand that we're going to miss some of them. And more important is we catch most of them. So in order to do that, you have to be very consistent with your hypothesis.
To test that your hypothesis. So what if the hypothesis is wrong?
Sorry again?
What if your hypothesis is incorrect? Hypothesis, because you say you have to be consistent, right, to test the hypothesis.
Oh yeah, it's about we call it 3P: people, potential market, and product.
Okay.
So we look at the team, make sure that the right team that able to execute, and then the potential market, it means that the target market has to be big enough, and the last thing is the product itself. But recently, actually, we don't look at the product anymore, because we think that good team will build a good product. So then we just focus on the team and make sure they are in the right market. This, what does it mean? It means like when we talk about people, we don't invest people that is not full-time, for example. We want to invest in people who is passionate about what they do. So we pretty strict with, there's another things why we sometimes miss deal. We don't invest in competing business. That's very clear.
Oh,
Yes, because East Ventures, we build an ecosystem. We want to make sure everybody can kind of like live in harmony. Everybody talk to each other, everybody nice to each other. So we don't invest in competing business.
Got it.
I think one of the key things that we focus a lot on as a venture capital investor is to avoid what we call the false positive. Meaning that, these are deals that you don't want to get into. You get into when you shouldn't be getting into. Because these are obviously, once you have that situation, you are in it for a long time, right? You cannot get out of it. You need to solve for that. There will be false negative, things that we shouldn't have missed out, but we missed. And I think that's okay. To Wilson's point, the question that we ask is, 3 years later, we know the company has progressed, but given the information that we had when we first had it, will we still come to the same conclusion? And the answer is yes. Then I think, the consistency is the most important thing for us.
And the thing that I'll add on to that is that, what you're trying to say is no regrets. I think to be a good investor, you can't have this fear of missing out and then, not have conviction in going back on it. You mentioned competition. So we have a growth fund. I would have to imagine you look at it the same way. Like, there are some deals that, because of competition, we didn't invest. We now just did a deal out of our growth fund that years ago they were competing with somebody in our portfolio. They're not in our portfolio now. They're not even competing. So we just we invested. We tracked the company. We knew the founder for a while. So there was never a regret, but there was always like, it didn't make sense at that time, but I've been really impressed by where they've grown. And so that, allows us to kind of invest at a different stage, a different maturity, a different time. It might be a higher price, but again, we still see huge upside going forward.
There are also increasing trends of investors focusing on ESG, impact investing, and so on and so forth. What's your view on that particular, type of investing? Sustainable investing, so on and so forth. Yeah.
I only know these terms like 2 months ago.
2 months ago.
Yeah. Then when some LP asked me, "Are you ESG compliance?" Is there another new compliance coming? Right. Then, but I think when we talk about investing, it is very clear that we want to make sure that we invest on the right guy to solve the right problem. But especially in Indonesia, we look at Indonesia, you have many different of customer, many different of businesses, and how are you going to make sure the digital tools, digital solution able to solve this problem? Unconsciously, actually, we make investment in impact business, what people call impact investment, those to serve the bottom of pyramids. We have been helping a lot those like mom and pop shop, street vendors, vegetable hawker, fishermen. We have a lot of these people. It's not because we look at that there is a lot of money come from it. We don't know how big is the market, frankly speaking, initially when we make investment. But the way we thought that time, if we don't help them, who else will help them? These people have no access to technology. Probably they have mobile phone, but no one will build some apps for them, for example, to train them and to let them know how to solve their problem. So it must be something from the top that kind of like try to help them. And this is what we call technology inclusion. We want to make sure every single guy in Indonesia is not left out by this digital revolution. It has to be for everyone. And turn out, it seems like that's the impact investment.
So you don't explicitly mention that you guys does impact investment, but actually you are because of your investment.
So are we compliant? I think by paper, I don't know. Yeah, but let's talk if you want to know whether I'm compliant to that one.
I almost think that ESG has been invented to kind of, again, differentiate funds and for consultants to make money by consulting and make funds ESG compliant. But that said, we are in a region where I would say 80-90% of what we do eventually would have impact on a lot of population that may not have access to a lot of these things before, lives become better, etc., etc. Yes, perhaps we can do a better job in terms of recognizing them and measuring those, right, in a more systematic way. But I truly think that a lot of things that we do right now already have impact, whether we intentionally invest in these companies for the purpose of impact or not. I think one of the reasons why digital technology is so attractive is because it's pervasive, it's fast, it's cheap for distribution. And when you have those things together, it reaches a lot of people and make lives a lot easier and better and more affordable for a lot of people. So naturally, that's going to be impact. Now, I guess as an industry, we just probably got to measure it in a more systematic way, and hence more money to be made for ESG consultants out there.
Yeah, for us, we like ESG. I Google it at some point earlier this year. Just heard it come up. So we don't have any like impact or development funds in our fund that require that, but same, I do think what we're doing creates a lot of impact. I mean, and things that we did internally, like last year we started a scholarship program where we started granting for some university students so they could go to college in Vietnam. And so this is stuff that's creating impact that we've just done because we look at it as really positive for the ecosystem, but not because we have an LP that says that or have some guidelines in our firm.
Got it. I think we are close to our end.
Maybe before later on, once you are closing the panel, I would like to play a video how we make impact in Indonesia to answer your questions.
Got it. Willson is very, very prepared. I think just to close today's session, we did talk about what's your view in Southeast Asia and investing into Southeast Asia. I think the consensus has been cautiously optimistic. That's the sense I get from them in terms of their investment hypothesis. I think they did share in terms of what they view, what goes through their pipeline, and when they say yes, seems like consistently it's been people. I think I just want to close off with what because I think I started off today with what were they expecting from a trend perspective next year. I mean, from a VC cycle perspective, very often we see like some years where, fintech has been really big from a media perspective or from a investments perspective. People are really rushing to it. From like fintech, I think that's 1 year. 1 year was like blockchain. I think Prime Minister Modi last year was at SFF last year when he talked about, I'm not good at jokes, but he did mention about, when you talk about fintech, people will give you like some of your, like half is wallet. If you talk about blockchain, they'll empty the entire wallet for you because again, it's quite trend oriented. Personally, I mean, it's not something that maybe your firm is doing, but personally, what do you think is the next trend looking forward? I mean, I'm looking at 2020.
2020?
Yeah.
Like next year?
Next year. What trend?
No, I think next year is too short.
Too short.
Yes. So I have a bit, personally I have some exciting stuff I think happening in Indonesia. The first one, we are moving the capital from Jakarta to Kalimantan, right? So as a technologist, actually I'm pretty excited about this. The reason is, I'm a mobile app developer before. It's kind of like building a new app, new capital, new app. When you build a new app, you will deploy the latest user experience, the latest design, the latest framework. So I hope that our new capital have the latest transport system, the latest technology, the latest IoT, the latest design, sustainability, whatever. So this is something that's very, very exciting. And the second one, a lot of people talk about flying taxi. I keep thinking, why can't people deploy flying taxi in Indonesia? We are the largest archipelago in the world, and a lot of sea. If can't fly, it drop to the water, right? So we are the safest place actually to test the flying car. Yeah, these are the two things actually in my mind.
To me, I mean, there's a lot of things that are happening, but if the question is like, hey, what could be something new for people to be looking into that it's not very big right now, I would say localized content. Like, I think that is just started. So, local comedy, drama, Indonesian TV shows aimed at like a younger millennial audience in a mobile form factor. I think there's huge opportunities there, and that is true across the whole region for people to jump into.
No whole lot to add. I agree with Willson that 2020 is not that interesting at some level because it's too close. But I think what I would kind of anticipate and think will happen across Southeast Asia is that the consumption sophistication becomes a lot much higher. It's gone beyond the basics of acquiring fashion and stuff to become a lot more sophisticated, a lot more nuanced. Whether it's healthcare, education, other areas as well. But more and more of people's life, I think, is going to be conducted online. And I think that would be interesting to see.
Got it. I think with that, maybe we'll end off with Wilson's very special video for us again.
Yeah, so this is our 10 years anniversary. We have been investing in Indonesia in 10 years, and this is what the impact that we made.
Got it. Congrats, by the way. Should we...
Welcome to Indonesia, the largest archipelago in the world and home to some of the biggest unicorns in the region. However, things were different back then. 10 years ago, the internet reached only 13% of the country's 230 million population. With the limited availability of physical infrastructure, amid the rapidly growing population, others may see a problem as it is. At East Ventures, we see it as an opportunity. We aim to provide a solution. East Ventures started with a mutual dream to be part of the solution, regardless of the challenges we may find ahead. We set sail by finding passionate founders who are eager to change Indonesia for the better. One by one, problem by problem, industry by industry. Our founders work hand in hand, forming a solid and integrated ecosystem by investing in a range of business verticals starting from marketplace, fintech, logistics, to new retail. We've been taking part in building Indonesia's digital economy, providing technology inclusion for MSMEs, and building the digital infrastructure, supporting national GDP, investing in many startups, increasing access to information, empowering people through education, enhancing access to the beauty industry, and strengthening the logistics network. fostering a digital workforce. Providing flexible offices. Today, Indonesia has one of the biggest digital economies in the world, with over 60% internet penetration rate. With the nation's brightest minds as our founders, we are beyond humbled to have been a part of this great journey. A decade of work feels just like yesterday, as we take on one opportunity at a time to take Indonesia to its golden era.
Okay, thank you. Terima kasih.